Okay, so we're recording. Sorry about that, and thanks. Basically, on this chart, what I was saying, and good morning, this is our little Friday review. I forgot to start recording. The only warning signs I had on this, but you could see a pattern forming of a move, reversal, move, reversal, move, reversal of a bigger candles. All in all, this really wasn't a bad trade. It just kept going. Like I said, the only thing I would have been is a little bit cautious because it was a round number only. It might have been a daily low that got pushed down further. I don't know. So he would have had a round number and a daily low, which in that case really would have been making it not that bad a trade at all. If it would have been the round number by itself, that would have been a warning sign. Um, RSI was good, VC was good. So again, like I said, it wasn't a bad trade, just didn't go his way. So not everyone is going to be a winner. Let's take a look at the next one. This was an ITM. See what it looks like. This is AUD NZD. AUD NZD is known for its spikes. He hit R1 and plus he hit the daily high, which created a new higher high. This one is a combination of just yummy happiness. First resistance one, value charts, and RSI 3 and 4 are on top of each other. Even if they didn't quite hit to the 90 level, they're very close together, which is a good indicator. When they're spread apart, not so much. But you can still take them as long as you're hitting levels. But I mean, you want to judge everything together to take a look at money management. Resistance 1 was hit, which is his strongest resistance level. Remember, your resistance numbers, the higher they get, the weaker they get. He touched daily high, got in, and it did drop nicely. All in all, very good trade. The only other thing is he created a new higher high out of this. So he had a lot of confluence on it, so it was a very good trade. I mean, absolutely nothing wrong with that one. Let's see if we can find an OTM on his again. We have VC8, COG2, BB Breach, daily high. And let's take a look at it, see what pair it was. Updating. Wait a few minutes, please. That's some crap. Give me a sec. That won't be good because most of my charts are through this. Let's try it again. And it's loading. I have some in that are screenshots that we can look at if this is going to be a pain in the ass. That might cut things kind of short. Let's take a look at the ones I have that are screenshots real quick. Since this doesn't seem to want to cooperate, let me get into the notes real quick. I think I have 3 of them that are screenshots. Okay, so let's take a look at a couple of the screenshot ones. I'm not sure what they are, but... Okay, so price became 50% fib and was being rejected from daily pivot. I entered the last minute, then it closed down like that. I'm not seeing where his entry was. I have no idea here because entry isn't marked, so boo. Remember, guys, if you send them in, mark your entry so we know where the hell you were. I'm gonna guess this is mad because I like his daily pivot lines. That's where I got the idea for the ones I'm using for TA3, actually. Let's take a look at another one of the notes. Maybe they're marked, and then we'll go back to the other ones and see if they work yet. It's like the second time this week I've been having a problem with seeing charts. It's kind of odd. Okay, this one's marked, but it looks like it's from a long time ago. Um, these aren't going to work really because they're in the middle, so I can't really see. I mean, basically, it looks like he had VC8. RSI was spread out, so it would have been It's middle of COG, but that doesn't really pertain anymore since the COG's been way on. And I can't see his levels, just a 55 level. Okay, that one doesn't work. Let's go to the next one. Sorry about that. If you send a trade in, guys, try and get it the next candle after. That way we can see kind of what the conditions were when you took the trade. And same thing, this one's in the middle. Previous, retrace to previous daily high, PA to the left look good. On this one, I could say when you have a sharp move up like this, I try to avoid the downside of it, or I go very cautious into it, and I will wait till it actually breaks below this one, where this one would have been a jump in early. So if you're doing new higher highs or new lower lows, and you have a sharp move on one side, always expect price. It may not come back down as sharp, price tends to come back down to the median, to the middle, like the elastic theory, the rubber band theory. So just I've seen a lot of people getting burned when on this side they have a sharp one and then it comes down and they're like, well, why do you keep running? It had all this support. Well, because it's coming back to its median. So let's take a look and see if these other ones will work now. If not, we're going to have a really short get-go, or maybe I'll jump over to live. This was an OTM. Please work. There we go. Cool. Okay, so again, we're seeing the same type of thing here, where we have on the 15 EMAs pointing down, and he loses. Previous daily high and a round number. It was most likely in the center of gravity when he took the trade. And value charts hit. RSI was way, way high on this one, so that would have been a no-no for me. Again, looks like he waited on a new lower low. And what is this? AUD USD. Nothing to say there. This one I honestly would have just said jumping the gun on it. If you look, let's see. Let's count back on the 1 minute candle. So we're 444 in. That one just closed. So this candle goes out. 1, 2, 3, 4, 5. PA-wise, this one did indicate that it was respecting levels. It popped back up to here. Actually, you can see the pullback. But then it continued just downwards again. This is one of those ones, it's just kind of harder to determine. Again, for me, I probably wouldn't take it just because of the 15 EMA. If I would have taken this, it would have been a smaller one. That pullback, let me count. 1, 2, 3, 4, 5. I would say he broke the rules on entry on this one because we had 3 minutes of green candles, so he had to have entered very early here. So the one thing I would comment on is I would say that if he had respected the entry rules, he wouldn't have got entry and it would have forced him to pass. The next one, probably he would have lost too, so that wouldn't have helped much. But it looks like this one was breaking the entry rules. It looks like it was an early entry because we got a pullback before we had our entry window. Remember, especially the more market volatility there is, it's really better off that you delay your entry to as long as possible. Most of my entries this week have been in the last 10 to 30 seconds. And the way this market's been moving this week, even the 30-second ones have scared me a little. Reason being is, let's say you have a perfect setup, like, let's say this was a perfect setup. When price pulls back that much, then all of a sudden it's not a perfect setup anymore because now it has room to drop again. But if price is right here when it closes, then most likely it's going to return up. So, especially on gold, metals, silvers, if you get a huge pullback on the candle, most likely you just got screwed because it's probably going to drop back down. Rarely it'll turn around and go back up, but that is normally off like a weekly pivot, a monthly pivot, or a solid pivot level. But just off of a round number or a daily high, daily low, things like that, if you see a huge pullback, it's most likely heading back down. Weekly pivots are a little bit different because a weekly pivot can signal a complete price reversal. If you notice and start watching it, when price hits a weekly pivot, it either plunges through it or it'll hit it and it heads back up for 2-3 candles. That's where I get a lot of my 30-minute trend trades with bins. When it hits a weekly pivot and that trade goes ITM for me, I'll sometimes take a longer term trade because I won the 5-minute. It respected the pivot nicely. Like you get a big move up, then I will wait for that the first candle to show up, and I jump in on a 30-minute in the opposite direction, or you can just watch it while it's forming to get better entry. So what I'm saying is you take your 5-minute candle, you take your entry, and that trade starts going extremely well for you, then go ahead and take a look at getting in a longer-term trade off of weekly pivots. That's one of the things that you will notice a lot, that weekly pivots do cause I don't want to call as we trade trading axis, a lot of times I refer to them reversals. What we're doing is we're doing pullback trading. It's not a true reversal system because a reversal would mean the price turned around, now it's heading the other way. We're trading the pullbacks. That's all we're doing is we're using Confluence to trade pullbacks. Weekly pivots do tend to cause reversals, which you can take advantage of. So it's something to watch and something to keep in mind. Don't jump on it the first time you see it. Watch it, see how the candle forms on your winning trade, and then you'll start getting the idea that the next time you'll watch it and say, oh, it's doing the same type of price action, let me jump in there. But don't jump the gun on it. Take a look at it for a little bit and then try it. Let's get to some of Mads because I told him I was going to look at his notes. Looks like we got, this is two AUD charts with numbers really close. So I'm guessing we have an itchy chart with this, which is cool. Let me see. Hopefully this is an itchy chart for it. Okay, so we got an itchy chart and a TA trade. And let's see, what did we have? What is this? UTC, AUD, USD. This is TA3. This is the red box here. That's your FIBO 100. Based off, again, this is a 2-hour range it's looking at. So we know that the market was approaching its first upper limit range. If you're familiar with FIBOs, you know that there's going to be the 100 is where reversals may happen. Or in my case, I ignore 127. I go with 161. So we have another box above it. Let me jump real quick to my charts. This is your 127, 161 range. While we're looking at it, I tend to take trades in the higher portion of this unless I have a really good reason lined up with it. But here's your first right here. This is your 100 ranges, and these are your 127 to 161. So if you hate drawing FIBOs, you don't really have to now. This is your 100. Here's 127 to 161. The higher it is in, the better likelihood it's going to retrace back down. Pretty simple. Let's get back to that trade, though. Okay, so he got a really nice win out of that one. It pushed through a daily pivot. Before that, didn't really respect it. And then it moved on up. He did a nice job of not jumping in on the... Well, it wasn't even qualified. But a lot of people jump in on the daily pivot. So it moved up. If we look down here, he has a yellow candle. So value charts was good. And levels-wise, not much there. But let's look at Itchy, see if he had a level there. So Itchy, you can see this was his trade right here. Let me zoom in a bit for you. So he used Itchy, and that was a very good support area. If you look, we got two peaks lining up. Price hit it and came back down. Other than that, it had right here to qualify that, plus the candlestick wicks. I know I say ignore them. Now if we move back, though, look at all these candlesticks that are just dying out right at this point. Even when price came down to it, it bounced back up off it. And again there. So we have 1, 2, 3, 4, 5. I'm just doing these by groups. 7. So we have like 8 rejections on that level. So that trade there was a very good trade. Now I tried that crap last night and got my ass handed to me. So it does depend on market conditions. But very good trade. It was a very good way to use Itchy because there was nothing on the TA chart, as in he had just pushed through a daily pivot level. Wasn't too much to go on. The one confluence he had was approaching 100% FIBO retrace. But when he went over here, I'm guessing he saw all that freaking rejections there. So that was a really good trade, and it's a nice way to use Itchy to pull a trade out. Again, a lot of times TA won't cough up a lot of trades, but if you use Itchy to pull out a few more trades, you will get them. And let's see what else we got here. And this is, I think, one of Mad's also, and that'll cover some of his, so that way I wasn't lying. Oh, crap. I just erased his. There we go. After this, we'll look for one more OTM, and that'll kind of sum it up. Jesus Christ, this chart is big. Oh, I'm zoomed in. Duh. I wonder if this guy answered me about the indicator. Sorry. This is where I get stuff coding done, and I have a message, so I'm hoping it's the guy saying that the news indicator's done, or he could do it, or something. I gotta check that once we're done now. Okay, so what do we have here? TA3. Value charts was hit. RSI 3 was hit. RSI 4 a little bit above it, but still... The gap's there, but still, meh. He had a new short-term lower low, if we look, which was kind of nice. And no Itchy chart on it. I'm guessing if Mad did this one, he had an Itchy chart. I might have missed the link to it. Let's see, 3 minutes left. I'm going to count back on the candles just to see what price action looked like. So these 2 candles, 3 candles go bye-bye. Then 1, 2, 3, 4, 5 puts us here. One, two, three, four, five. Okay, so on the 1 minute chart, I can see why I took it too. 1 minute chart showed a sharp downward movement, and then it bounced back up, then down, and then pulled back up, down, pulled back up. So I'm guessing there probably was some kind of level there. Remember, guys, we don't have every possible level on the chart, but by price action, this one was extremely pretty 1 minute price action, because price was bouncing all over the damn place. There was something at that level, whether it was a support, a resist, a demarc line, a freaking daily FIBO line. Something was there to cause price to react, and he saw it. The new lower low would have been your indicator, because you would have gotten an alert saying there's a new lower low. This one is a little more of the thinking outside the box thing and using price action. I don't see the itchy chart. I'm going to guess maybe on the itchy chart it helped too. But he would have got the new lower low one. And if you would have been watching 1 minute price action, it was bouncing back and forth like crazy. I don't know if you can see him. Let me see if I can zoom in on him. But here's the spike down. Once that spike did, it hit something. It hit an order that bounced it back up. So then price bounced back down, immediately moved back up. Then we get a doji candle, and then this would have been his entry candle, somewhere around here where he would have been in entry. But then we get another one, tiny little one, and then we get our movement up. So 1 minute price action, that's honestly, that's probably by the book what you're looking for, is when a level is hit for price to start bouncing around like that and reacting to the levels. If it just slowly moves through it, those are the type of trades you want to stay out of. And let's see if I can find another OTM here. Okay, so this one's COG3 VC8 support resist line. Let's take a look. This is one of the newer guys, which he's still learning. Already what I'm getting from it is not trading a range. So we have a huge move down. Remember when I said there's a huge move down? Well, what do we expect on the upside? You expect it to bounce back to the median or to the center, the elastic, whatever you want to call it. Price tends to move back up. Anytime you see this pattern, guys, be very, very careful. Because, like I said, price is going to try normally, unless it's some really whacked out news. On these FOMC and NFP days, yeah, charts will tend to generally go with the news reaction for the rest of the day. So if it's bad for the US price will drop all day. On these minor news reports, so if this was a news report and it dropped like that, I don't know, let's say it was employment rates in London or some shit, whatever it is, price will drop, but then it tends to kind of come back up and then keep on going for the day. It doesn't cause a permanent fluctuation in the market unless the news is very extreme. And remember, on these news releases, you're looking at percentage points, not even one, like 0.06 points on a news release. So you can't expect it to just force the market continuously down. Looking at the trade, the 15 EMA is actually downwards. He had level-wise, I'm not seeing too much support. I see a little bit right here from back here, but again, with this big move down, I would just pass on this area moving back up, unless it had one hell of a wall. When I say that, if I'm going to take a trade moving back against it, I'm going to be looking for something like a 3 level of confluence. I'm going to want a pivot level, a FIBO, and a support and resist. I'm not going to take it based on solely one level of resist in this case. I really advise y'all to. I mean, the only thing you should be taking is a solo confluence, and then it's not confluence. Pivot points, no. Like a weekly pivot with something, yes. But you always want to kind of back up your trades with something. You never just want to go with a solo reason, or else bad shit happens. And I think I was doing that last night too. I don't remember anymore because my head was hurting so bad. Let's take a look at one more. Let's see, we VC COG 8, round number, pivot level, and SR on M15. And so we wouldn't be able to see. Let's look at the last one because I won't be able to see the 15-minute chart he's referring to. Okay, so this one, previous weekly high, held it, and then bounced. I feel I'm going to have to figure out who this guy, I have to go figure out who it is, because Honestly, he's not taking bad trades, but he's jumping in too early. This is a ranging market, so it doesn't look too bad. But here's again, we have a big upward move. It's not as drastic, but when it's coming down, we're taking this trade in the middle of that previous upward movement. Not the smartest thing to do, and you will tend to see it coming down. Even the COG says upward momentum. But if you're going to take these type of trades again, you really, really need to line up confluence. When you're looking, you want the range to be able to finish its forward movement down. When we're trading the range, that's what we're saying. We're trading this range up. So when it's coming down, it would make sense to trade it when it gets closer to the downward side of this range. We're not wanting to trade the middle of the range. Even with the cog not there. That's why with 3 you don't have to use the cog. If you're trading the range, you want to trade the range, not the middle of the range. Um, Even if your indicators tell you good, which this one spiked 3 times on VC, RSI was spread out like crazy. Um, I wouldn't take it because I'm looking at trading in the middle of a range. Even with the center of gravity saying it, you still got to look back and judge because if you look, it's a center. It's some. His entry was the center of this range back here too, and then back here it would have been the bottom. So if you took out this middle W, see the W? If we took that out, this would have been a good trade if the W is missing because it matches up with this range. But it doesn't match up with these two big movements. So we get a big movement, market's expanding, then moves up, comes down, market's moving up again. The range expanded, so you have to trade accordingly with that the range expanded. You can't trade in the middle or compare it to the old range. Other than that, that's good for now. 10 o'clock, I'll be doing a little thing on money management. Should be somewhat interesting. I touched bases on it. Does anyone have any question on any of the charts, or do you happen to have a chart link now you want looked at or reviewed? As if not, I'm gonna go vape myself and have some coffee. All right, guys. If you do have any, remember send the charts to me again for your itchy charts. Draw your levels on your itchy charts. Send them to me so I can check them. Um, they're it's just an easy way to create some more trades. Again, summer's coming up, so start getting prepared for faster moving markets and possibly look at taking trend trades. I would focus on them. If you see a trade out there that you think might be a good trend trade, watch for the weekly pivots, bounces off weekly pivots. With summer coming, you're really going to have to pull stuff out of your ass to not lose money. If you don't feel comfortable trading in the summer, don't. If you're struggling now, you're going to do horrible during the summer. So, word of advice now is if you see something you think it's a trend trade, send it to me. Say, hey, what do you think of this? Would this be a good trend trade in the future? Best thing to look for in trend trades is a good direction and wait for a pullback, then jump in it. If you have questions on what that is, hit me up and I'll try and show you. I'll try and show some trend trades since, like I said, I'm going to be trying to show a few different trading ways since we're moving into summer. You really do have to adjust your trading strategy during the summer, and you have to be able to recognize market conditions quickly because they are going to change rapidly. And the last thing about summer trading is it's faster paced. The charts will move faster. Waterfalls everywhere. But if you can learn with Itchy to identify waterfalls, what are you setting yourself up for is some freaking trend trades. So practice, practice, guys. Keep summer in mind. It's scary, but all you need to think during the summer is it's bad conditions, so you're basically waiting. Market conditions change faster during the summer and they're bigger moves. So it actually, if you learn to recognize them ahead of time, especially on the trend trades, using Itchy to identify waterfalls. Itchy right now, me and Kevin have our own little project. Like Itchy right now, when it tends to break through a cloud, it tends to reverse slowly and come back. During the summer, you're going to see more and more often that Itchy, when it breaks out of that cloud and it says that it's a high probability that it's going to run, that bastard's going to run. So you just need to start watching to be able to identify it. That, hey, I do have a potential run going, and you'll be able to get into them. Even if it doesn't run, if you catch it early enough, you'll be able to get in good enough for a trend trade, and price won't come back in time. So don't be scared. Just start thinking about it ahead of time and preparing for it. Other than that, guys, hit me up. Again, on Itchy, If you have questions, hit me up there. I have the whole series showing it. Next week, we'll focus in on Itchy and on the TA trades again. I'll start trying to point out runs if I can catch them. So what I'm going to do is extend each the Monday and Wednesday. We're going to do 30 minutes each on them, and as charts pop, we'll jump to them and look at them also. So that way we can start getting a look at some live charts too. Any other questions? Anything like that, guys, gals, if we have any. Never know. All right, cool. Have a good one all. Trade safe. Don't get your ass handed to you like I did.